Stakeholder analysis and organisational social responsibility. Part A. Discuss and critically assess the concept of stakeholder power and interest using the Mendeley model and apply this strategy and governance. Stakeholders are the people that are connected to the company in some close or remote form. It is often confused by students with shareholders, which is incorrect. Stakeholders can be the postman, the neighbour, or even the government. They are all, closely or not, connected to the business in some way. Mendeley argued that the two main variables to evaluate a company's stakeholders was to look at their power in the company and their level of interest in the company. You will find Mendeley's matrix in the description of the lesson. The matrix shows a grid made up of 4 boxes, with the level of interest on the horizontal axis and the level of power on the vertical axis. Each one is split into 2 between low and high level. In the top left corner, with low power and low interest, the matrix informs us that the stakeholder requires minimal effort. In the top right corner, with high interest but low power, the stakeholders must be kept informed. In the bottom left corner, with high power but low interest, the stakeholders must be kept satisfied. And finally, in the bottom right corner, with high power and high interest, the stakeholders are defined as key players and must be central to the company's agenda. Power low, level of interest low. A. Minimal effort. Level of interest high. B. Keep informed. Power high. Level of interest low. C. Keep satisfied. Level of interest high. D. Key players. Part B. Evaluate the stakeholders' roles, claims and interests in an organisation and how they may conflict. Because stakeholders are connected in some way to the company, we can categorise and classify them in various ways. If we look at the claims of these stakeholders, we can state that they come in different forms. Stakeholders may have direct claims to the business and will communicate them directly and clearly. For example, a creditor may chase the company for late payments. Stakeholders can also have indirect claims, due to the fact that they are not able to communicate them directly. Even though valid, their claims do not reach the company due to a lack of power or access. For example, a foreign supplier or animal and plants towards a company. Another way to categorize stakeholders is by proximity to the company. Internal stakeholders are the employees and directors of the company. Connected stakeholders are the shareholders, the customers, the suppliers, and the lenders of the company. External stakeholders are the government, the public, the media, and the competition of the company. Stakeholders can also be viewed as active or passive. Active stakeholders are those that are heavily involved in the activities of the company, like employees and directors, while passive stakeholders are simply not involved that much, like the government and shareholders. Part C. Explain social responsibility and viewing the organisation as a corporate citizen in the context of governance. Companies have increasingly been held accountable on the world stage for their economic consequences of their activities. Companies are now implementing corporate social responsibility, also called CSR, in order to give back to society. The concept in a nutshell is quite simply the company takes into account the interest of society and takes responsibility for it. From then on, it is important to note that it is then beyond their legal and compliance duties, and it is purely above their basic obligations. The corporate citizen model is often used, which is a pyramid made up of layers, to illustrate the ascension made by companies in CSR. From the base of the pyramid to the top, the following items are modelled: economic need, then legal need, then ethical need, and finally philanthropic need.